I increased my gold holdings because gold functions for me as liquidity. It's a savings asset. Silver occupied a speculative place in my portfolio. I bought silver originally because silver was hated. When it ceased to be hated, the reason to own it in my account went away. So I had to say, what's the best use of speculative cash? The decision was made easier for me because there was a hyperbolic up move in silver, what you Canadians call a hockey stick graph. I've learned that the backside of a hockey stick graph is just as steep as the front side, but it's a lot less fun if you happen to be long. And so, while many people get attracted in a positive sense to a hyperbolic up move, I get attracted in a negative sense to a hyperbolic up move. I decided specifically that since the reason I owned my silver went away, that there were better speculations for me than silver. So I exited silver for other uses of capital. I did not exit gold. In fact, 20% of the money I made, 25% of the money I made selling my silver stocks, my physical silver, I used to buy physical gold. Copper demand is supposed to increase between 2.5%, 2.5% compounded for 10 years without AI. You add data centers on top of that. If you believe that, I talked to Robert Friedland the other day, and Robert was telling me that with the projected demand for data centers, that we will consume more copper in the next 15 years than we've consumed in the history of humankind. If you take data centers out of the equation, it will take 30 as opposed to 15 years. In either case, as an example, the case for copper and the case for uranium is very clear.
Okay, going back to your cash statement for a minute, you are, stacking cash. I've observed enough successful investors doing the same thing to notice a pattern. Whenever they do this, they believe the valuations of whatever sector they're focused on or specialize in your case, the resource sector, is probably not at the optimal value to get in. In other words, you think it's overvalued. Is that what you believe right now? Yeah.
I don't. I think the smaller end of the gold sector is cheap.
Okay.
It's just I don't care what I think. I want to sleep nights and stay calm.
I see.
I have what is in a historical context too much liquidity in my portfolio. A financial planner, or frankly, a Rick Rule looking at my portfolio 2 years ago, would have said you have too much liquidity. You have a lazy balance sheet. Right now, lazy feels just right.
So you're not doing this because you're expecting a 2009 moment to get in. That's not what you're doing?
I think there is less than a probability of that occurring. I just think that the penalty for failure is too high. Buffett will tell you during the time he's operated Berkshire Hathaway that the share price has fallen 50% or more over 18 months, 4 times. Anybody who is in the equities markets who isn't prepared for a 50% decline shouldn't be in equity markets. I've been in equity markets for a very long time. I think there's a less than 50% chance of it occurring, but I think there's a more than 20% chance of it occurring. And if it occurs, I'm afraid it gets underway in earnest. The difference between taking advantage of a liquidity squeeze and being taken advantage of in a liquidity squeeze is simply liquidity.
Well, I'll remind the audience, by the way, that Rick's call on silver and gold have been rather appreciated. In fact, as another reminder to the audience who haven't followed our previous interviews in the last couple of times Rick's been on the show, late January, Rick sold 80% of his physical silver holdings. He said this several times at the Vancouver Resource Investment Conference. He said this on my show days after it aired. Silver went down 30% in a single day. Silver is currently trading at $75. It's been trading range-bound since mid-March. What are you doing now with your gold and silver holdings?
I increased my gold holdings because gold functions for me as liquidity. It's a savings asset. Silver occupied a speculative place in my portfolio. I bought silver originally because silver was hated. When it ceased to be hated, the reason to own it in my account went away. So I had to say, what's the best use of speculative cash? The decision was made easier for me because there was a hyperbolic up move in silver, what you Canadians call a hockey stick graph. I've learned that the backside of a hockey stick graph is just as steep as the front side, but it's a lot less fun if you happen to be long. And so, while many people get attracted in a positive sense to a hyperbolic up move, I get attracted in a negative sense to a hyperbolic up move. I decided specifically that since the reason I owned my silver went away, that there were better speculations for me than silver. So I exited silver for other uses of capital. I did not exit gold. In fact, 20% of the money I made, 25% of the money I made selling my silver stocks, my physical silver, I used to buy physical gold.
Let's talk about uranium. You actually retweeted this, but there's the sense of growing resource nationalism spreading from Brazil to Africa to Middle East about how countries should preserve their critical minerals. And where I'm going with this is, how does uranium fit into the global picture of critical minerals that have become front and center on headlines all over the world?
Uranium is actually the greatest beneficiary, I think, over time of the Gulf conflict. You will recall, or perhaps you weren't because you're too young, but the Japanese nuclear fleet and most of the French nuclear fleet was built as a consequence of the Arab oil embargo of the early 70s. Uranium offered the only commodity that was energy dense enough that a nation could store all of the fuel that they needed in one warehouse to sustain the country's economy for 5 years. We're relearning that lesson right now. No country more thoroughly than Japan. The most important near-term determinant for the uranium price is simply the refueling pace in Japan among Japanese reactors. There's a 41 reactor fleet. They've restarted 16 plants. The Japanese now have the impetus to start their remaining nuclear fleet. And that takes uranium now, not uranium 3 years from now or 4 years from now, not uranium that's contingent on a data center or small modular reactors. The energy security afforded by uranium at the same time that the world is desperately short of baseload power and would prefer non-carbon generating power means that the clearest of all beneficiaries of the Gulf conflict is uranium. And that will play out in the market over the next couple of years.
Well, this came in from Bloomberg late December last year. Nuclear industry to add 15 reactors next decade after 2025 decline. The nuclear industry expected to switch to 15 reactors globally in 2026. More than 50 new reactors are set to go into service worldwide from 2027 through 2030. I wonder, how permanent is this trend? Rick, you'll recall Germany, as an example, was a leader in nuclear production, and that peaked some point a couple of years ago, and then now their nuclear energy production has declined to near zero. So what was a mega trend for them was only transitory in retrospect. What contributed to the, I guess, fallout in popularity of nuclear energy in Europe? And can we see that trend come back?
I'm not European,
Okay.
maybe visually, but not culturally. So I can't say. I mean, there was a whole succession of stupid energy choices that Germany in particular made. And it's absolutely beyond me as to why they made them. I just have no earthly idea. Ironically, carbon was something that was important to the Germans. So now they're having to burn more coal than ever. How does that work? Their grid is substantially less reliable, and German people's electric bill is up fivefold in 12 years. That will point, I think, wonderfully to the failings of their product. Nuclear has gone, in a very short time, from a period of time when I, as a nuclear proponent, I expected to see my face on a post office wall, on a sort of a most wanted poster. And now my government wants to subsidize me. Now, I feel like I was cleaner when I was on the most wanted rather than being subsidized. But that's a different question. What it suggests is that there's a population around the world who is perhaps more technologically sophisticated and is concerned about carbon loadings, and one that recognizes that the world needs more of all forms of power. If you combine those two things, non-carbon generating, cheap baseload power, there's one alternative, which is to say nuclear. That doesn't make me anti-solar. It doesn't make me anti-wind. It doesn't make me anti-oil and gas. It doesn't make me anti-coal. The fact is that material standards of living around the world, if they're high, are energy dense. On the one hand, there's 1 billion people on Earth with no access to primary electricity. We will electrify the world in the next 20 years. That's going to require more electricity of all sources. At the same time, people who live in parts of the world that are already electrified want a higher standard of living. And that is very, very, very energy dense. I will say that although I'm not a technologist, I'm a skeptic as to the amount of energy that's likely to be consumed by great big data centers. I have a belief that if you throw $5 trillion or $10 trillion at a problem, that you find ways to develop solutions to that problem cheaper. I don't know what they are, but I suspect that some of the great scientists alive in the world today will find a way to make artificial intelligence and data acquisition much less energy intensive. So that to me is a bright spot.
That's already happening, actually. On that note, RAM chips makers are suffering or have been suffering the last couple of weeks. You recall Micron stock went down because Google announced a new TurboQuant model that requires less memory. And so who knows what that's going to do to copper, for example, or other raw materials.
And I think that's important for people to recognize. Copper demand is supposed to increase between 2.5%, 2 and 2.5% compounded for 10 years without AI. You add data centers on top of that. If you believe that, I talked to Robert Friedland the other day, and Robert was telling me that with the projected demand for data centers, that we will consume more copper in the next 15 years than we've consumed in the history of humankind. If you take data centers out of the equation, it will take 30 as opposed to 15 years. In either case, as an example, the case for copper and the case for uranium is very clear.
When it comes to uranium and copper producers, or any resource investor, resource stock rather, but let's just focus on uranium as an example. Is it conceivable that abroad in Kazakhstan and China and other countries around the world where uranium production is much cheaper, North American companies are competing against companies that have much higher margins and lower operating costs? How do North American producers, the Camecos of the world, stay competitive?
Well, I would argue with you that Cameco is the most competitive uranium producer in the world.
Okay.
Certainly they have higher systemic costs than most, but they have a pretty wonderful track record of on time, on budget completion. The Kazatomprom was the lowest cost producer, but Kazatomprom seems to have had a major exodus of middle managers, as an example, and they have been unable to restart Inkai successfully, which was, of course, shut down during COVID. The bottom line to all that was, were I a uranium investor, and by the way, I am, I would focus on Cameco. I was uncertain about Cameco the first time that you and I talked some years ago, because I wondered when a uranium mining company buys an engineering firm like Westinghouse, how they're able to manage two businesses. And I was afraid that both businesses would suffer. Turns out they managed pretty well if you look at the balance sheet and the income statement. So what Cameco seems to have done is transformed themselves ultimately from a miner of U3O8 to a seller of watts. Fully integrated, which is extremely important. It's also important to note, and I know a lot about Cameco, that material that they regard as waste would be regarded as ore by most companies. Do they have challenges? Yes. Ironically, some of the uranium that they mine is of such high grade that you have to mine it robotically. You can't put humans down there, it kills them. That's a wonderful challenge to have.
The challenge with uranium investors, I guess for my audience, is that similar to other resource stocks, we don't know who's got the better deposit, who's got the better grade. How do you apply geology to uranium?
That would take a whole show, David.
Okay.
I have the answer to that. We did a whole 8-hour-long uranium boot camp.
Yeah.
To teach investors precisely how to do that. It took us 8 hours, and I'm not sure we got it done after 8 hours.
Well, that you can tell us where we can find that information. And by the way, you can tell us what we can find at the Rules Symposium. Has the Rules Symposium agenda changed in the last couple of weeks? I know you've been planning this for quite some time, even before the Iran conflict begun. But since February 28th, have you changed the agenda for what to focus on?
We haven't. We have a 30-year track record from that conference, going all the way back to throwing the conference in Vancouver. And we learned that there's a format that works for us. You have big picture, big picture people talking about the interplay of politics and economics and what you need to know to invest. And you have ones that you'll never hear on CBC or CNBC or Fox. People who tell you about the world the way it is, as opposed to the way that conventional media thinks it ought to be. And then we have portfolio managers and securities analysts who have experience, real world experience in natural resources and precious metals for 40 years, not 4 months. That's a pretty powerful combination. We have exhibitors at the conference who've all been vetted, unlike other conferences. And to top it all off, we have a money back guarantee. If you attend our conference, either online or via live stream, and you think for any reason you didn't get your money's worth, we give you your money back. What we aren't is particularly flexible. We couldn't anticipate the war in the Persian Gulf, and we've made no attempt to secure a speaker who could speak well about it because we don't think in the near term there's much that one can know. The outcome of the Persian Gulf crisis will be very well known by the time we put on the conference. If the Persian Gulf situation lasts for another 4 weeks and we run out of floating inventory in oil and gas, and we run out of strategic supply of oil in particular in economies like Korea and Pakistan and Sri Lanka and India, the impact of that crisis will be very well known and unfortunately not very pleasant. If by contrast, we solve the problem in the Persian Gulf in the near term, and we normalize oil supply, we will have to deal with the hangover, with the shock that was presented to the global economy. And we will also have to look at how various nation states, various geopolitical blocs, deal with increasing resource nationalism and a competition for resources that I think will shape resource markets for 10 years anyway. And we will cover that topic ad nauseum.
What do you think is the next Strait of Hormuz? In other words, this crisis has brought to the world's attention the importance of choke points. Any other strategic choke points in the world that you think is critical to monitor?
I don't think as critical. Certainly the Malacca Straits are critical in terms of taking material to China, but there is the long way. If you shut down those straits, you could go around New Zealand through the Pacific. There's no other concentration that I know of, save perhaps the English Channel or Gibraltar, that offers the same narrow focus or the same concentration of commodities. As I noted before, the Straits of Hormuz doesn't just transit 20% of the world's oil supply. It transits well in excess of 50% of the world's export oil supply. So if you're an importer, it isn't a 20% problem, it's a 50% problem. Similarly, liquefied natural gas, similarly, sulfuric acid, similarly, helium, similarly, nitrogen and nitrogenous fertilizers. This is a very, very important, very, very unstable place. And a whole bunch of the commodities that the world relies on transit through there. And a separate problem in terms of the threat. This isn't just a geopolitical threat between Israel and Iran or the United States and Israel and Iran. This is potentially a focal point in a millennium-long schism between Shia and Sunni Islam. And to the extent that the largely Sunni Arabian Peninsula had greater feelings of enmity towards the Iranian Shias or vice versa, this is a circumstance that could spiral out of control for reasons that nobody had anticipated as a consequence of the current conflict. I'm not saying it's going to happen. I'm just saying that this is a historically unstable region that is unusually important in the transshipment of the raw materials that run the world.